I think London is probably, alongside New York, the two most global investment markets at the moment. At Colliers, what we're finding is that there's a lot of money from Asia, as I think we all know. In fact, we're in the building now that was recently bought by a Malaysian pension fund, the Pilgrim Hajj Fund. And I think we're seeing a lot of money coming out from Asia that like to have a presence in London. I think with regard to Europe, they find the pricing of currency risk much easier to do with sterling, of course, than they do looking into Europe at the moment. So they find London particularly attractive. With regard to the Canadian and the North American funds, again, they're buying into prime assets, but as we've seen with Brookfield and Oxford Properties and some of the developers from North America, they are looking at the next stage up the risk curve of going into development here in London. On top of that, you then have the private people from across the world, and again at Colliers you can almost do an A to Z of different countries and people, investors from different countries who are buying into London at the moment. A lot of that is family money, and just recently we've been doing some work with a Middle Eastern fund and private money, and they're looking to buy, for the phrase was for grandchildren that are not yet born, which is not a phrase I'd heard before. I think on top of that, again, if you look at the sentiment analysis that Colliers have done recently, I think it's quite optimistic, looking 2-3 years ahead. And finally, I'd say that I think one of the issues that we're finding is that there is this desire just to go for prime property with safe returns. Going up the risk curve is sort of people are slightly nervous at the moment of doing that. If they can help it, they'll just go to prime, but prime values, of course, are very high in London now, yields are low.
Great.
I think one of the things that we've seen as sort of concern that there be a sort of an increasing bifurcation of polarisation between prime property and secondary property. That will continue, and that there's a lot of secondary property in the UK that's frankly very difficult to value, where if the tenant became insolvent, and obviously there's a risk of insolvency, they'd be extremely hard to relet, or where the actual rents in real economic terms are significantly below the passing rent. And there would be an argument that quite a lot of that property could almost have a zero value because no one's going to lend on it, which I think shows this sort of concern between the difference between prime and secondary. Equally, I think we're seeing clients look at secondary and saying it is a bit of a black box, and that there are opportunities there as well, where they think there's something that's near prime but not quite prime.